This is Phil McCall from Connecticut. I wonder, it's been some time since you've commented on Coca-Cola, and now that you're off the board, I wonder if you feel free to comment on it.
Yeah, well, I won't make particularly different comments than from when I was on the board, but Coca-Cola is a fabulous company. Coca-Cola will sell over 21 billion cases of various products, more Coke than anything else, around the world this year, and it goes up every year. It's interesting, the stock in 1997 or 98, whenever it was, sold over $80 a share when the earnings were, I don't remember what, $1.50 a share or something like that. And the earnings then were not as of good quality as the earnings are now, when they were $2.17 or something like that. And every year they account for a little greater share of the liquids consumed by people in the world. They make fabulous returns on invested capital. It's a business that has, exclude the bottling part of it, has 5 or 6 billion of tangible assets and makes a similar amount. So there are not lots of big businesses in the world that earn 100% pre-tax on tangible assets, and it'll be a great business, and it's been a great business. The stock got to what, in retrospect, clearly was a ridiculous level, but you can't hold the present management, Neville Isidel, responsible for that. And if the company sells 4 or 5% more units this year than last year, and the population of the world goes up 2%, it just means that more people are putting that particular source of liquid down their throats than the year before, and that's been going on ever since 1886. So it strikes us as a really wonderful business that sold at a very silly price some years back, and you can definitely fault me for not selling the stock. I always thought it was a wonderful business, but clearly at 50 times earnings, it was a silly price on the stock. So we like it. We'll own it 10 years from now, in my view. Charlie?
No more.
Peanut brittle gets caught occasionally, but it's worth it. It's worth it, definitely.
Near me and
What? Oh, you want some, huh? Get your own box next time.
So, this was from 2006 Berkshire meeting, when the stock chart of Coca-Cola looked like this. I can't even begin to explain how much I love Buffett's answer. There is not a single company in the world where you can pay any price and expect to get great results. Coca-Cola had a 100% return on tangible assets. They sold 4 to 5% more units year over year, while the global population grew 2%. And they had been around for 120 years at the time of this answer. Yet, Buffett continues to say, you can fault me for not selling the stock, because at 40, 50 times earnings, 5, 6 or 7% year-over-year growth will not justify it. While the business was great, the stock price was just silly. Since Berkshire was a major shareholder, there could have been other reasons why he didn't want to sell the stock, and he definitely wasn't buying more at those prices. But when we individual investors look at the stocks we own in our portfolios, we always have to ask ourselves, is the price currently too high? I also believe that for great compounding machines like Coca-Cola, you can justify holding even when you think the stock price is too high. But when it gets to the silly levels that Buffett mentioned, in my opinion, it would be best to sell the stock and hope it gets down to more rational levels so you can buy back in. You also have to factor in how much tax you will pay after your sale, which I'm sure was another reason why Buffett didn't sell at those silly prices. Today, I see people paying very high multiples for companies like Nvidia, Tesla, and even Costco. I believe all of these are fantastic companies, and Costco could very well be the best company on earth. But as an individual investor, I don't believe we have to put our money into companies with the largest market caps on earth. If I don't have the burden of investing billions of dollars at a time, why would I only look at companies with hundreds of billions in market cap, even trillions with Nvidia? Buffett himself says that if he had to invest a small sum of money, he is pretty sure he could achieve 50% returns. I always hear people say, oh, Buffett's biggest position is Apple, so it should be the best offer Mr. Market is currently giving us. No, his largest position is Apple because Apple is one of the very few companies that can absorb the amount of money Buffett has to invest in. I'm not saying Apple isn't great or that you shouldn't own Apple. It is totally fine to own Apple. I'm just saying that if you are looking for 30, 40, 50% returns, there is a very small chance you will find it by investing in Apple. For example, another company, CCI, is a Turkish Coke bottler that operates in 12 countries and serves around 600 million people. It is valued at $6 billion, and since my coverage of it less than 2 years ago, it has more than doubled while paying dividends. I cover opportunities like this on my channel and now on Patreon, where I released a 35-page deep dive on Raysash, my biggest position, where I have around 70% of my portfolio. I will release CCI's deep dive on my Patreon in June, so make sure to subscribe here and on Patreon if you don't want to miss it. That was it for today. I hope you liked it, and I'll see you in the next one.